let's start off with some company news that's filtered through Access Bank, as I was saying, Access Kenya rather, as I was saying earlier, out with numbers, profit plunging for 2010. And some would say hardly surprising, but what have you made of the extent of the fall that's come through?
Well, we actually thought it was going to remain in profit territory, despite the fact that they had actually issued a profit warning sometime last year. It was a bit surprising by how much that has fallen. Of course, the debt has something to do with it. The increased depreciation, well, that came a bit as a surprise for management to quote something like that. But the other factors, the cost of interest and cost of the cost that they incurred due to the movement in currency, perhaps that we should have seen that, but we didn't really expect a negative number.
Of course, that competitive environment when it comes to the data space is really adding pressure as well, where we've had the likes of Safaricom enter that data arena pretty aggressively. How do you see this coming to bear on Access Kenya moving forward? Because that growth outlook moving forward is not looking that encouraging at this stage.
Okay, in the corporate sector, corporate market, I think Access have their name well. The brand is well respected. It is perhaps in the individual homes that they might have problems, and we worry because Safaricom has been putting quite a bit down in terms of investment in infrastructure, especially in the retail end of the business, data business for that matter. And you know, for the big telcos, they're looking at the data space because voice is becoming less and less of a reliable source of profitability going forward. So we worry about that, and also in terms of brand development, especially due to advertisement and marketing. I think that Access still lags Safaricom, and that will play a big role in generating revenues in the days to come.
Of course, it opens up the room for speculation as well as to whether or not Access Kenya now stands as a potential takeover target. In the meantime, we had British American Kenya, a holding company for two insurance firms and an asset manager, swinging to a full year profit from a loss in the previous year. What's your view on that company at the moment? Because this is a company that's expected to list via IPO in June.
Well, I expect that a lot of the income came from the investment revenue streams. I know insurance business is having some trouble coming from the premium side. So we can attribute that to a good investment environment, and it remains to be seen how they'll handle 2011, because 2011 is looking pretty tricky for especially the equities market. What
do you make of corporate Kenya looking towards the equities markets even more so as an avenue to raise capital to fund growth moving forward?
Well, it's a welcome movement because too much dependence on debt financing makes the whole economy unstable because of the nature of debt. But if they came to equities, well, yes, the cost of cost of capital employed will be higher. It still serves the whole economy well because it gives a more stable base on which companies to grow going forward, and I will encourage a lot more to come to this space.